the risk in California, it has historically been a consumer-friendly state for laws, which for decades kept home insurance rates relatively low compared with the national average, and at least according to industry data. And the reason why this is important is that these laws changed recently politically, and insurance companies started charging a whole hell of a lot more money.
Hmm.
Now, politically, insurance companies will typically lobby to do so. And I'm not saying insurance companies are good or bad, although every time I have this conversation, somebody inevitably says that, you don't understand our side of the insurance, argument or their side of the insurance argument, and you're never going to win it. And I'm not trying to have that fight. This is just matter of fact, okay? Leading insurers have pulled back from the state of California, leaving many in the path of the fires with only bare bones insurance. Something known as California Fair Plan is going to come up here. We'll talk about that.
What does bare bones mean?
So, bare bones means insurance provided by a state-sponsored insurer or the last resort, or worse, no insurance at all. So, if you're going to have typical insurance that you pay for, think Farmers and State Farm,
Hmm.
you can get pretty good hazard insurance coverage that'll cover your replacement costs new.
Right. You got your dwelling coverage, the coverage for the house,
Mm-hmm.
right? There's personal property coverage.
Yep.
There's liability coverage, loss of use, and even things like medical payments.
Mm-hmm. Yep. In some cases, you can get hotel stays covered in the case of natural disasters. There's some really good things you can add on to your insurance policy. And generally speaking, the larger insurance companies, if they are insuring your properties, then you've generally got those benefits. However, there is something called the California Fair Plan, and we'll get into that in a little bit. But effectively, California Fair Plan is if you can't get insurance in the state of California because nobody will insure your property, maybe you're in a flood zone, maybe you're in a fire hazard zone, maybe you're just in a place that they consider to be too risky, and nobody will insure you, can go California Fair Plan.
Mm-hmm.
It generally doesn't cover a whole lot.
No, yeah, it covers bare minimum.
It covers a bare minimum for you to meet the insurance requirements for your lender.
Yes.
But generally speaking, you're not going to get your replacement cost new, which means you cannot replace that building fully with the insurance proceeds you're going to get. So you're going to have to come out of pocket for the difference. And that difference in some of these really expensive homes is big.
Well, you got to think, and now you fall back on the systematic failures if you're one of these homeowners, right?
Mm-hmm.
That has lived here for however many years, and I know there's areas that there are more expensive homes that were affected by this,
Yep.
and there was areas that homes weren't as expensive, right? But let's just look at the Pacific Palisades. If you're living there, right, and you've paid whatever you've paid in state income taxes and whatever you've paid over the years in property taxes, there's a certain level that you would expect, like, okay, we'll be taken care of.
Yeah.
And the budget that gets put in place will make sure that we're all taken care of.
Well, it's just property taxes. You're paying local municipality taxes. You're
All
paying
that.
your local sales tax, your state sales tax. I mean, you're paying for. This is one of the highest tax states in the country.
So there's a certain level of expectations, I believe, that come with that.
Yeah.
And now the real genuine concern is for people, some of those homes are definitely underinsured,
Mm-hmm.
if insured at all. Some people, I've heard cases of some of the homes, the insurance cost was so high that they elected to not get insurance because the homes are already paid off.
Yeah, so if your home is paid off and you don't have a lender, generally speaking, most people get hazard insurance because their lender requires it, and they certainly give you kind of a list of what they require.
Mm-hmm.
You typically get an appraisal for your property when you get financed, and in that appraisal, they do one of the approaches to value that they use is a replacement cost new. How much would it cost to replace this property with a new one in the worst case event scenario that it was burned down?
Right.
That figure is generally your, quote, insurance requirements if you have a lender. Now, if you don't have a lender, it's always smart to have hazard insurance because if this happens, you need to rebuild it. But you can choose whatever value to insure your property for that you want. You can overinsure it and cost more money, or you can underinsure it and it costs less money, or you could not have any insurance at all and just say, hey, look, I'm not really likely to have my house burned down.
And let's not forget what economic time are we currently living in? What are we going through? There was a Hollywood strike not too long ago.
Yeah.
And a lot of people from Hollywood were living in these areas.
I didn't peg you for a Hollywood guy, but now that you're talking about something with such subject matter expertise, the classes make sense.
Oh, now you get why.
Yeah, you're trying to be sophisticated.
Yeah, exactly. Yeah. I would not be surprised, and I will not be surprised if people just absolutely walk away from it all.
And I'm afraid that might be part of the problem.
I'm really afraid of that happening.
You've seen an exodus of celebrities and actors in particular from California to other tax haven states, Nevada, Mark Wahlberg, Florida, Stallone,
Texas, Joe Rogan.
Texas, Joe Rogan, McConaughey.
Mhm.
There's a lot of people who've left like Malibu's region or, some of the higher imports of Los Angeles to
Mhm.
go.
Theo Vaughn, I think Tennessee.
Is he in Tennessee now?
I believe so. Yeah.
I didn't know that. That makes sense knowing Theo
Mhm.
Vaughn. Yeah.
Yeah.
So I think a lot of people who were, this is going to sound very political, and I don't mean to over stigmatize it, but I would say Democrats today uh, are very much different than Democrats during like Kennedy's era. I think Kennedy's era Democrats were more like Republicans today. I think
Yes.
we've gotten very extreme in what is a Democrat and what is a Republican. And I'm not trying to put any names associated with it as much as to say is that this state, more than many other states, has been very politicized. And I think that this might bring a lot of people who otherwise identified as Democrats back towards the middle of the spectrum, saying, "Hey,
Could be.
this
Right.
is
It
wrong."
might it might it might need to happen. I mean, this tends to happen in any situation, not just politics, when there's an overcorrection one way or the other.
Mhm.
The pendulum needs to swing back so far the other way in order to correct things that I mean, it might there might need to be something this catastrophic in order for that to happen.
So let's finish out this Wall Street Journal article. Even before the fires were sparked, millions of homeowners in the Golden State, especially those in the path of LA infernos, faced double-digit insurance rate increases, non-renewals, or a dearth of any available private coverage. There just wasn't anything out there. And I've seen it firsthand. People will go get California Fair Plan as their last possible resort, and they'll get the absolute bare bones minimum that they can get coverage-wise just because they can't afford to cover the property with more than that.
Hmm.
And if you're owning an income producing property and you're not one you're living in, you're going to get as much insurance as you need to, but not a penny more because it's going to take away from your cash flow, that free cash flow every single month. And as we know, those properties under already harsh increases in taxes and insurance and everything else. So leading insurers, including State Farm and Allstate, have stopped selling new home insurance policies in the state of California, saying that rate increases approved by regulators were insufficient to cover their losses, including from the devastating wildfires of 2017 and 2018 in this state.
Put things into perspective here, I got some stats from State Farm.
Oh,
They
okay.
chose to not renew 30,000 home policies in California
Yep.
this year, and they ended 69% of policies in the Pacific Palisades.
Which is kind of crazy given where this fire is at. Like, that's a big, almost 70% of their policy coverage in the Palisades. Now, hopefully those people went out
Mm-hmm.
and got new coverage,
Right.
but I can guarantee you it was more expensive or it's California Fair Plan and it's a bare minimum.
Right. And California actually has laws in place to where, some of these insurance companies actually need to carry a certain percentage of policies in these dangerous areas.
Mm-hmm.
So if they're going to, provide coverage in the state of California,
Yeah.
a certain percentage, whatever, I don't know what that percentage is, needs to be, directed towards these areas.
Which I think is a terrible idea because then they're just going to say we're not going to be in the state, which is effectively what some of these insurers did.
God knows what's going to happen. Yeah.
Yeah. So it's a terrible situation. Our heart goes out to everybody. We wanted to start the show on more of a serious note, but because it is the higher standard,
Yeah, I mean,
we're going to take the low bar. And I had to bring a little bit of levity to a topic that is very heavy. For those of you who listen to the show consistently, you know how much of